Oh, I've had 2 espressos this morning and I'm about to call the ambulance. So everyone's been wondering, if I want to invest in real estate, what do I buy right now? Where do I buy it? When should I buy it? Etc., etc. And I think I found a product type in a city that you could buy that would insulate you and keep you safe from market volatility that has high upside potential. I'm that Agent Kelly. This channel is all things Canadian real estate and my local market of Abbotsford and the Fraser Valley. And if you would like to chat about buying or selling real estate in my market, you can book a time to chat with me using the first link in the description. All right, so with how volatile the market and the economy is right now, there is going to be a lot of opportunity for investors. However, with high risk comes high reward. So if you're an investor right now, you're likely looking for something that's, cash flow neutral, high growth potential, and a market you understand with a lower price point entry. And if you could tick all of those boxes, you might actually pull the trigger. So check this out. I think right now it is a great time to be looking into buying a detached home in Chilliwack with a suite. So here's a home. It's built in 1959. It's 6 bed, 3 bathroom, upstairs rented for $22.50 per month. One of the suites downstairs is rented for $15.50 per month, and another suite downstairs, so 3 suites, is rented for $1,050 for a total income of $48.50 per month. It sits on a 10,000 square foot lot. It's listed at only $899,000. So this home is located in a sub area of Chilliwack called Fairfield Island, and Fairfield Island, with its official community plan, is an area that is wanting to be zoned infill for higher density. And this home looks like it also meets all the requirements to subdivide with a 70-foot frontage, 10,000 square foot lot, and a depth of 143 square feet. And I believe you only need 68-foot frontage to subdivide and like 110 depth, I believe. Don't quote me, check with the city, but that's what I think. So let's look at the numbers, right? So rent, $48.50. Let's say we can pick this up at a discount, call it $880,000, 30-year AM, 6.5% interest rate, $4,400 a month mortgage. Property tax is $3,500 a year. So if we divide that by 12, it's $291 a month. And insurance, I'm going to put $200 a month, although it's probably slightly less than that, for a grand total cash flow of negative $51 a month. Now, obviously, I didn't include maintenance. There's probably going to be some maintenance. You could include 5% for maintenance if you'd like, but these are the fixed costs, and this is what you would expect in cash flow per month, negative $51 per month. Now, obviously, we're not getting rich off the cash flow here, but we're not getting broke either. And I'd also say there's very little risk involved here, because let's just say you bought a 2-bedroom condo and rented out for $2,800 a month. Sure, excellent. You're going to be negative cash flow $800 a month, and if your tenant stops paying you, you have no income. You are hemorrhaging every single month. Whereas a property like this with 3 suites, if one tenant stops paying you, it's very unlikely the other 2 are going to stop paying you. Therefore, okay, you lost one stream of income, but you still got the other 2. So there's a lot less risk involved with having multiple tenants. And also keep in mind, you're losing $51 a month at an interest rate of 6.5%. So let's see what happens when you can refinance at 5%. Now we're cash flowing $600 a month. What if rent was $500 a month higher in 2 years? And by the way, I would say that these rates are already below market. You could probably get like $5,200 for this home, but even with this, keeping these market rates right now, and then they go up $500 in 2 years and you refinance at 5%, now you're cash flowing $1,100 a month. What if in 3 years you could refinance at 4.5% and rent is $800 a month higher? Now you're cash flowing $1,700 a month. And I get people say, that's a peachy situation. I personally think rents are going to keep going up. With rates, maybe it is, maybe it isn't. The Bank of Canada's target overnight lending rate is 2.5%, which would put interest rates right around that 4.5%. Now, obviously, they could raise the target overnight lending rate, but I'm just painting a bullish picture here for you guys. Now, I don't even care about the cash flow, because that's not what makes us rich. What's going to make us rich in this scenario is the fact that they aren't making any more land. There's tons of government policy coming in surrounding higher density, and they're actually eliminating the single family zoning, or at least talking about eliminating single family zoning. I know they're doing it in Vancouver. The BC government, I think, wants to do it in all of BC. And by virtue of those 2 things happening, it's going to make single family homes a more scarce asset. And with the demand for housing or land increasing, the price of the land that sits under your single family home should go up. The land is what makes you money. The structure that sits on the land is what plays defense and allows you to safely hold that asset by paying the expenses that come with owning the land. But the cash flow the structure produces is not what makes you wealthy. The land underneath the structure is what makes you wealthy. And with a parcel of land like this, you have multiple exits. You can hold on to it and hopefully collect massive cash flow in the future when the dynamics of the economy eventually change. You can knock this house down and hopefully subdivide into 2 new lots and build 2 new houses and sell them and make a profit. You can rezone and sell it like that. You can rezone, knock the house down, subdivide, service the 2 brand new lots, and sell them ready to build. There are so many exits with a property like this, and because it pays for itself and has multiple streams of income, there's a very low risk profile to owning something like this. It's also just a $180K investment as opposed to $250, $300K like most single family homes would be anywhere else in the Fraser Valley and Greater Vancouver. Now, I'm not telling you to buy this house. I'm just opening up your eyes to the opportunities that are out there right now. It's been a long time since I've seen property where the rental income covers all of the expenses that come with owning that home. Like just, 5-6 months ago, you would have been cash flow negative. A year ago, you would have been massively cash flow negative. And the thing I love about this idea right now is that the growth potential for land at the moment is insane. I personally don't see you losing on this in a 5-year time frame. In fact, I think in 5 years, you're going to do really, really well on land. Again, guess, but I think the supply-demand imbalance that Canada has right now for homes is not good. And it's going to get worse because new construction housing starts are at an all-time low right now. It's literally going lower and lower and lower. And when we get into, the latter half of 2025 into 2026 and 2027, we're going to have a massive, already like worse than what we have right now, much worse, massive shortage of homes that should exist, but they don't exist because we haven't been building homes right now or started building homes right now. And we're gonna have an extra 2 million people living here. So just by virtue of that happening, I think we're going to see prices increasing by that time. Could be wrong, but I think it's a great time to pick up some land in a environment where, we are going to be building more condos, more townhomes, and everything but single family homes. I got clients buying in Chilliwack right now. It looks like a good idea. I think it's a great idea. I got conviction this is a good idea. And if you'd like to do the same, you can book that call with me. Don't forget to subscribe. I'm that Agent Kelly. I'm making moves to move you. Peace.